So last week we were down to 6.4 something, versus like 6.43% last Monday. And I was concerned. Okay, welcome back to the Numbers and the Nuance. I'm Christopher McGee. I'm the owner of Halcyon Real Estate, affiliated with the Keller Williams Market Center in Salt Lake City, Utah. Today is the 12th of August, and I'm about to break down for you exactly what Utah's housing market looks like. That's what I do every Monday. I'm gonna give you my projection of what I think our market looks like based on the numbers, and then I'm gonna show you the numbers. All the numbers come right off of the MLS, and I've plotted the data points so that you can see the trends of what's happening with all those data points. You can put it together however you see fit. But I will give you my rundown of what it all looks like right now. All right, so you'll recall that last week was really a continuation of how we've seen the Utah housing market run since early spring. That is to say that our inventory or our housing supply continues to go up while the demand for buying houses has remained stagnant, and therefore the upward pressure on housing prices has remained stagnant as well. That continues this week in all points. You'll see the numbers here in just a moment. You'll also recall how last week interest rates jumped down 0.4% from where they had been the week prior, and a full 0.6% down from where they've been averaging at about 7% for the entire year. So last week we were down to 6.4 something versus like 6.43% last Monday. And I was concerned because while lower interest rates is what all buyers want right now, and indeed it's what all buyers want all the time, of course, right? If we get hit with a sudden drop of interest rates below 6%, really even below 6.5% in my opinion, oh my goodness, if we hit anything in the fives, the amount of buyer demand that we're going to see surge back into the market is going to be enough, this is my concern, that amount of demand will be enough to take big enough bites out of our supply to create a shortage of inventory and an increase of demand, and therefore a rapid upward pressure being placed on housing prices in Utah again, where for the last 5 months they've been really stagnant. We haven't really seen them come down yet. We'd like to see them come down maybe a little bit before we see them start to rise again. And when we see them start to rise, we need to see them rise not like the side of a skyscraper, but like the side of a gently sloping hill. We don't want to be taking off through the stratosphere with prices again in Utah. So I was concerned by that sudden drop, and I said last week that I'd like to see interest rates really hover between 6.5 and 7% throughout the rest of this year into next year. Unpopular opinion, I get it, but that would allow our inventory to continue to come up as it has been, and it would encourage this much needed correction in our housing market for home prices. And guess what? Interest rates hopped right back up to 6.55% as of today. And do you know why? It's because the Fed actually never touched rates. The drop that we saw in rates last week was not the Fed dropping rates. That was the mortgage market anticipating that the Fed would drop rates, so trying to make it easy for the Fed and coming down and saying, all right, land this plane, bring the interest rates down, because the data that we know the Fed is looking at, particularly jobs data, how much unemployment we see and how much job creation we see, those data points moved in the direction that we know the Fed has been looking for as the Fed's signal to be able to drop rates. But the Fed, it turns out, wants more than 1 week of data in order to be able to cut rates. And I mean, good for them, right? As I've often said, 1 week of data does not make a trend in housing, or it turns out, in the larger national economy. Let's look at the numbers. Our inventory, which seems to have been slowing down the last couple of weeks, actually picked up a solid 200 this last week. And so we're sitting at 10,804 available homes for sale right now as of this morning. So that's up and still trending up, as you can see. Average days on market in Utah ticked up 1 more day to 48 from the 47 that we had last week. And so trending up from the last few weeks. If we look at this as this chart is looking at it from the beginning of the second quarter to now, then this looks to be trending down, but it looks to be trending up from the last month and a half. Last week's average list price for homes in Utah was $660,819, down significantly enough from last week's average list price to make it look like this is staying within the trend of stagnant that it's been in for the last 5 or so months. And the average sold price of homes in Utah last week came to $644,334. And so the difference between average list price and average sold price came again in the buyer's favor to the tune of $16,400 $585. The number of homes sold last week came to 521, back down from where it was the week prior, and therefore keeping us within the stagnant trend that we've had in place since early spring. The number of homes currently under contract came just a little bit down again to 5,018, trending slowly down. And let me just jump in here between charts and tell you this, that when inventory is climbing, but our number of homes under contract is dropping, number of homes currently under contract is more indicative of current demand right now than is what I typically use, the number of homes that were sold in the last week. Because once you're under contract for usually about 4 weeks, and then the property is sold. It won't record as sold on the MLS until it's been under contract, usually for about 4 weeks. And so the number of homes under contract coming down tells us demand maybe isn't stagnant anymore. Maybe it's actually been coming down for the last few weeks, and maybe we'll watch that reflect in homes sold measured in the coming few weeks. We'll see. All right, the number of price reductions that we saw last week came to 1,163, down a bit from the previous week, but definitely still trending up. The number of listing contracts that were either canceled, expired, or withdrawn from the MLS last week came to 290, down from the previous week because the previous week was the first report of this month. And so that always spikes, and then we always see it drop back down immediately after. But nevertheless, we can see this trending up a bit from the beginning of the second quarter. And finally, interest rates, as I said, a 30-year conventional loan as of this morning stands at about 6.55%, up from the 6.43 that we had last week. And like I said earlier, I'm kind of hoping it stays between the 6.5 and 7 throughout the rest of the year to give our inventory that chance to climb, to keep the pressure off the home prices from going back up again. We'd like to see them correct. All right, that's it for this week. As always, if you have any questions about anything that I've said here, about any of these numbers or any of my projections, feel free to hit me in the comments. I'll be happy to respond. And if you or anybody you know is thinking to move in the coming months or this year at all, whether you're buying or selling a home or buying an investment property, you know I know this market like the back of my hand. I'll be very happy to work with you, keep you educated on what's going on, make sure you always know what's happening next, and just be on your team. And of course, if you want to stay updated on exactly what Utah's housing market looks like, there is no better way than to follow me weekly. Hit that subscribe and make sure you know from week to week what the market looks like. Few things can be more tragic than making a bad decision in real estate because you were uninformed. And a lot of people think they're well informed, but if you don't know the right now market, you can be tragically misinformed. I don't want that for you or anybody. So thanks for watching. I'll see you in the next one.